This was a huge earnings for some of my key holdings. Tesla, Microsoft, Meta Platforms, Nextracker, and Lam Research reported their earnings. Most of them rallied big while Microsoft dropped a little bit after their earnings. In this video, I'll break down what happened, share my technical analysis, key support and resistance levels, and will share how I'm planning to buy the dip and manage my $200,000 portfolio. If you are serious about building wealth through smart investing, subscribe now. I share portfolio updates, stock breakdowns, and strategies every week. Alright, first up, we have Tesla. This company missed earnings by a small margin. Estimated EPS was 0.77, but the EPS came out to be 0.73. Surprisingly, the stock still went up. However, this move doesn't feel strong to me. There's not enough momentum to push it higher right now. I currently have 2 shares of Tesla with an average price of $224. Now let's check its support and resistance levels. Tesla seems to have a strong support around $358, $323 and $270. These are the levels I would consider buying more shares of Tesla. And to the upside, $465 seems to be a good resistance level. Anyway, I'm expecting a pullback in the coming weeks, and if it drops to these levels, I'll consider adding more shares. But right now, I'm holding tight. Now, let's check Microsoft. They reported strong earnings, but the cloud sector growth slowed down a bit, which led to 6% drop in the stock. I currently have 11 shares of Microsoft with an average price of $411. Looking at the technicals of Microsoft, next major support levels are 408, 397 and 387 seems to be a good support levels on the daily chart. While on the weekly chart, I see $366 and $350 as a great support for Microsoft. And no need to check its resistance levels as it's already trading under its 200-day EMA unless you want to swing trade Microsoft. But even after the earnings miss, some analysts have upgraded Microsoft and gave a buy rating. For long-term investors, this dip could be a great buying opportunity. I'm watching the key support levels and will buy more on any pullbacks. Alright, next up we have Meta Platforms. And Meta absolutely crushed earnings and the stock crossed $700 before pulling back to 680s. And the big news is many analysts have upgraded their price targets to $800 and even more after this report. I currently have 10 shares of Meta with an average price of $592 and I'm already up 16% on my current shares. Now let's look at Meta's technical analysis. Alright, Meta does have strong support around these levels, $602, $581 and $543. I feel very safe holding Meta and believe this has more upside potential. If we get a pullback, I'll be looking to add more shares. Next one in our list is Nextracker. Nextracker also beat earnings by a huge margin and the stock is up over 20%. Now trading above $48. I currently have 10 shares with an average cost of $40.70. Now let's analyze the technicals of Nextracker. With huge gap to the upside, I'm concerned a little bit because whenever there's a gap in the chart, it usually gets filled in the coming months. Here's an example. If we see last quarter earnings, we had a similar reaction where it created a gap and it got filled in December. And going back a bit more to 2024 Q4 earnings where stock was down after earnings which created a gap to the downside. This also got filled in the last few weeks of 2024. That's why I'm waiting for a dip before adding more. Here's the support level I would like to buy more, $42. This seems to be the next support level and I personally add more shares of Nextracker around $42. And to the upside, $61 seems to be a very strong resistance level. I'll be watching for pullbacks and will add more below $42. And finally, we have Lam Research. Lam Research also beat earnings, and as I predicted, EPS came in higher than expected. The stock is up 7%. Let's check support and resistance levels for Lam Research. Alright, to the upside, we are looking at $86, $90, and $100 seems to be a strong resistance level. And to the downside, $74 and $72 are the strong support levels. I won't be buying right now, but we'll wait for red days where the market pulls back to add more shares at better prices. So overall, this was a huge earnings week, and my strategy is to hold strong, buy dips, and manage risk smartly. If you enjoyed this breakdown and want to see more real investing strategies, hit that like button, subscribe, and follow my journey to financial freedom. Drop a comment below. What do you think about these earnings? Are you buying or waiting? Let's discuss.